Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 30th, 2025, we're dissecting the formidable Amazon, ticker Amazon, and the critical factors currently influencing its price action. We'll start our analysis by looking at the daily chart over the past year and a half to grasp the broader market sentiment and key long-term trends. Overall, Amazon has been in a significant uptrend since its recent low in late April 2024, rallying over 38%. This strong performance peaked around $242.52 on February 4th, 2025, marking its 52-week high. However, we've seen some considerable volatility since then, with the price currently hovering around $231.01. Let's zoom into the period between April and August 2024, specifically from April 25th to August 5th, 2024. Here, we can observe the critical low formed at $166.32 on April 25th, 2024, followed by a sharp rebound. Notice the substantial volume on April 29th and 30th as the price attempted to move higher, before a massive drop on August 1st and 2nd. This period likely correlates with early concerns about AI costs squeezing margins, leading to a significant pullback and finding a 52-week low at $151.61 on August 5th. The subsequent rebound from this low shows strong buying interest at these depressed levels, indicating a potential long-term support zone forming. Now, let's fast forward to the very recent price action, focusing on June and July 2025, from June 20th, 2025 to July 29th, 2025. We can clearly see a large bearish candle on June 28th, 2025, which aligns perfectly with news of Jeff Bezos concluding a significant $5.7 billion stock sale plan. While these sales were pre-planned, such a large insider divestment can undoubtedly contribute to negative market sentiment and downward pressure. Despite this, the stock managed to recover some ground in early July, but recent days have seen it dip below the psychological $231 level. This recent weakness is in line with headlines reporting that AI costs are indeed beginning to squeeze Amazon's margins, causing some investor apprehension. Switching to the 1-hour chart for an even closer look at short-term movements, let's examine the period from July 9th, 2025, 1700 hours Universal Time Coordinated, to July 18th, 2025, 1300 hours Universal Time Coordinated. This shows the price action just before the current set of news events. We can see the stock struggle to maintain momentum, particularly around the $225 to $226 range. The hourly chart highlights resistance forming at $226 to $227 and support around $222 to $223, indicating a period of consolidation. This short-term perspective helps identify immediate trading ranges and microtrends before major news hits. Drilling down further to the 15-minute chart, specifically for July 29th, 2025, from 8 Universal Time Coordinated to 23:58 Universal Time Coordinated, we get a granular view of the intraday dynamics. We observe periods of tight consolidation followed by swift moves, often on increased volume, signaling institutional activity. For instance, the significant selling volume in the mid-afternoon UTC led to the breakdown below $231.50, confirming short-term bearish momentum. This timeframe is crucial for active traders seeking precise entry and exit points, as minor support and resistance levels become more apparent. The current close around $231.01 reflects this immediate bearish pressure ahead of the Q2 earnings. So, what does this all mean for Amazon? Let's consider the reasons to be bullish in the short and long term. Amazon is scheduled to report its Q2 earnings on July 31st, with analysts predicting robust revenue of $162.0 billion. A positive earnings surprise, especially with strong guidance on AI profitability, could trigger a significant short-term rally, potentially reversing the recent downtrend. Long-term, Amazon's continued growth in cloud computing via AWS and its dominant online retail presence provide a strong fundamental backbone. Jeff Bezos, despite recent sales, still retains over 8% ownership, indicating his long-term confidence in the company. Furthermore, historical performance shows AMZN's resilience, often recovering strongly from dips, as seen after the April-August 2024 lows. However, there are compelling reasons to be bearish. The recent stock drop below $231 is directly attributed to concerns about AI costs squeezing margins. If Q2 earnings fail to address these margin concerns, or if the revenue outlook disappoints, we could see further downside. Jeff Bezos's substantial stock sales, even if planned, inject a degree of uncertainty and supply into the market, potentially capping upside. The abandonment of the Dublin industrial facility, while minor, points to potential operational hurdles or increasing infrastructure costs. In the short term, the market appears cautious, waiting for earnings confirmation. For traders, key price levels are paramount. The immediate resistance stands around $233 to $234, as demonstrated on the 1-hour chart. A decisive break and hold above this level, ideally on strong volume, would signal a potential short-term bullish reversal. Looking higher, the next major resistance is the 52-week high at $242.52. On the downside, the current price around $231.01 is a critical immediate support. A sustained break below $230 could lead to a test of lower support levels, potentially around $220, which acted as a floor in late 2024. If $220 fails, the next significant support zone would be closer to the late 2024 lows around $195 to $200. Now, for some unbiased predictions and what to look for. A strong earnings beat tomorrow, particularly with positive comments on AI cost management and future profitability, makes a bounce to $238 to $240 highly likely, perhaps 70% probability. This would be reinforced by immediate high buying volume post-earnings. Conversely, a disappointing earnings report that confirms margin pressures or softer guidance would make a drop to $220 and possibly $195 to $200, highly likely. Perhaps 65% probability. This would be reinforced by heavy selling volume and a failure to recover the $231 level quickly. Traders should closely watch the earnings call tomorrow, July 31st, after market hours, as it will be the primary catalyst for the stock's immediate direction. Pay attention to volume accompanying any significant price moves. High volume validates breakouts or breakdowns. Also, monitor broader market sentiment, especially regarding tech stocks and AI investments, as it can influence Amazon regardless of its individual performance. Keep an eye on any further insider transaction disclosures, as continued large sales could signal underlying concerns. Always use stop losses to manage risk and consider your risk tolerance before making any trades. To recap, Amazon faces crucial short-term tests with its Q2 earnings tomorrow. Important resistance levels are $233 to $234 and then $242.52. Key support levels are $230 to $231, followed by $220, and then the $195 to $200 range. Look for post-earnings volume and whether the market confirms or rejects the current bearish sentiment. Remember to factor in wider market trends and manage your risk diligently. Thank you for joining us on Explain the Charts, and we'll see you in the next analysis.